Here are 10 tips to consider when buying a multifamily property here in Southern California, 2024 version. Okay, so diving in, tip number one is researching trends, understanding what's going on in the market where you want to buy. And you can go online and do a lot of research and get a lot of data. But what I also recommend is contacting active multifamily brokers selling properties in the areas you want to buy, talking to them, establishing a relationship, getting some dialogue going. They're going to share so much information on trends in the market, what's going on real time, and that can be invaluable. Tip number two, diving into location. Location matters. We all know it, location, location, location. But taking it a step further, when I get interviewed with buyers that are thinking about signing up and working with me exclusively, they've asked, which markets should I look at? What are some of the markets you like, Dan? And what I told them, I'm open to a lot of different cities. Have a wide lens on where you're looking to go. For example, all of Orange County can be a fantastic market to watch and learn. It really just depends on the street by street. There's a market, let's say it's Anaheim. There's great streets in Anaheim and there's not so great streets in Anaheim. There's streets in Anaheim that has literally been the same for the past 15 years, and there's some that have gotten better and better, and there's areas that are changing and that trending up. So you want to make sure that you buy in a great location, because you can't fix the area, but you can fix the building. Now here's a tip. We need to help you build a checklist of what you're going to do in your due diligence process. You're going to have to check out the title report, check the property, inspect what you expect with the property checking out per the marketing brochure that you went through and reviewed. Hopefully there's a lot of good information there and the broker makes it easier for you. But you've got to do this all concisely. You've got to go through and inspect all the due diligence, go through all the leases, all the P&Ls, but you don't want to have a dragged out 30-day, 45-day plus inspection period. You're not going to be taken seriously by a seller with multiple offers. And if there's offers with 10, 14 days, 17 days or less, you've got to be able to do all your contingency period and due diligence in a short period of time. Moving into tip number four, evaluating rent potential. You want to make sure that you understand market rents. You want to make sure that, especially in times like right now, we're starting to see concessions show up. So you want to take the market rent that you're seeing when you go online. If you go to HotPads or Zillow and you see what pops up and what's for rent in the area, you want to go in and zoom in on it, look at it, see in the notes, see if there's any move-in specials, because you need to take that off, that concession off the market rent to get the effective rents. Moving on to considering value add opportunities. ADUs are the new value add within the marketplace for a lot of investors. There's a lot of incitement and people going in and adding ADUs. We're seeing it big time on the coast right now, where the cost of doing ADU on the coast is the same price as doing one in another area, inland Orange County. So you're getting more bang for your buck on the coastal markets. So understanding the value add. There's also probably a traditional value add opportunity. You could go in and raise rents and doing a value added program that way. Maybe it's also implementing RUBS and building back utilities. There's a lot of different things you can do to build in your value add opportunities, but you need to know them. Financing options. One recommendation is to see if the seller will carry the financing. We get asked that all the time, but sometimes the answer is yes, this owner will consider it and is open to it, and that can create some great flexibility and a win-win for the buyer and seller. Also, loan assumptions. We've also seen a lot of bridge financing. You just really need to get an understanding of what is available within the marketplace if a conventional loan from a bank is not going to work for you. Building a strong team. Having a strong team is invaluable. Now, what I mean by that is understanding you got to have the right real estate agents working for you. They're basically your acquisitions team, if you will. Also having a good property management company, contractors. With your contractors and your vendors, build out an Excel sheet of your vendor list and start with your plumbers. You need to have a good plumber and have a couple, because whenever you need a plumber, you already want to have 3 numbers you can call right away. And I recommend having a few, because sometimes they're really busy and can't get to a job. Plan for contingencies. This is something where you just want to have a little allocation in case something doesn't go right? A pipe breaks, or the roof didn't last as long as you wanted to, or you had a couple extra turns and you need to increase your budget. Just having a pad there, because something will probably not go as planned at some point within your investment purchase of a multifamily property. So having a little pad there is very important. Number 9 is super important, staying compliant. This is very important because we've got to stay updated on local regulations. We've got to stay up to date with landlord-tenant regulations. You want to make sure you avoid any legal issues, and you're just up to date with all the laws. I'm a member of the Apartment Association here for Orange County. They've been a great resource. I highly recommend looking into them. And there's just, you can bounce things by them and make sure that you're in compliant. Very, very important. Okay, and then last but not least, having a long-term vision. Over the past couple of years, the market was in a frenzy. Rates were at low, very, very low levels, record low levels, and things were selling. We'd see the same property come on the market every 2 years, and it was kind of, you know, like it was just a frenzy, right? This is traditionally a long-term investment. You need to have a long-term mindset when you go in and plan. This is a long-term wealth generator for a lot of investors that have looked and said, you know what, I want to build cash flow, I want to build appreciation. This is something I want to do long-term. So having a long-term mindset, having financing that is set up to where it's not some short-term 12-month, 24-month, unless you're a seasoned investor and you know what you're getting yourself into. Those are the 10 tips. If you want to talk further, let me know. I am here and happy to help you with your journey of acquiring more units. Thanks so much for watching. We'll see you soon.